Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 7th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get this on. It being a Monday, not a whole lot of economic data here in the United States, albeit we do have Kashikari speaking later on today. Actually, it's coming up pretty soon, and maybe a couple of other Fed governors speaking along the way. But then across the pond in Germany, we did get German industrial production month over month came in at negative 1.1%. Was expected to be positive 0.2%. So a bit of a drawback there, not too nice to see necessarily for robust economies, I suppose. And then that's about it for the economic data. Onto the overall markets. We've got crude oil down about 70 cents right now and back below that Fibonacci level. As you can see, we're really just consolidating right here, really looking to move the time and volume nodes up here right at that $49 a barrel mark. So that's where the bulls and the bears are going to be battling over that psychological level. It also just happens to coincide with the Fibonacci, the 200-day, and now the 5-day kind of creeping up into that area. So it really looking to move sideways. Not a whole lot of news coming out of the Middle East to kind of spook the markets, if you will. I mean, as much as they say that they want to cut back on production, there's too many OPEC countries that are not going to follow along with any crimp in production. So I don't really see that changing anytime soon. So I'd probably like to see it hang out here, maybe just slightly above $50 a barrel, because then we can start cranking up our fracking operations here in the United States. Those guys can be a little bit more profitable, and we can be a little less dependent on foreign oil. Plus, it creates a tremendous amount of natural gas, and if we can get natural gas prices to go down, then all of our energy prices kind of come in line and allow the consumer to kind of spend their money elsewhere as far as I'm concerned. So crude oil kind of right there at the $50 a barrel mark. Let's call it 49, but who's counting a dollar here and there? Anyway, on to gold futures. They're off slightly on the day, just down by a couple of pennies anyway. But, just hovering, trying to tread water, I guess, if you will, above that point of control, which lines up with the 50 Fibonacci level. So gold futures hanging out. Just really not doing anything, just kind of watching the show go on with the equities. Bonds are slightly in positive territory above that 50-day moving average. It does look like it's in a bullish trend just because of the crossover here between the 200 and the 50. But at the end of the day, it's right there pricing in value. Not seeing anything in the economy to really make bonds spike higher, which would indicate lower interest rates. So I think the Fed is on track with their mandate. 125. Don't really see them changing that for the next several months, at least going into next year, just with the way that the data points are coming out right now. It looks like it's kind of right where they want it. Onto the Dow Jones. Yes, you see it here. New historical high. And, $100 above that 22 psychological level, 22,000 psychological level. So Dow Jones well into the 2200s and not really showing a kink in its armor lately. NASDAQ pushing higher as we saw that sector rotation out of tech and into the blue chips. Blue chips continue to do well, and NASDAQ starting to push a lot higher now, up 27 points on the day. The tech sector's looking pretty decent, and as I remember when I was saying they were rolling out of that tech, that's the time to get into that stuff when you see that bit of a pullback, and I'll talk about that here in a minute when I get into some of my trades. But E-mini S&Ps, they're up on the day for $4. Very quiet day in there, and as you can see for the past several weeks just boring, straight sideways. Not a whole lot to take advantage of in markets like that. We need something to kind of stir things up a little bit going forward to get that market really kind of going and make it easier for us option traders to take advantage of some volatility or at least some movement. Hard to really sell premium in low volatile markets. It just is not there. You don't want to really get involved in that, because if volatility increases, then you are going to maybe be directionally right, but still not able to make money because of that increase in volatility. So we don't want to see that as option sellers. This is the mini S&P on a 30-minute chart. As you can see here, value area high is above yesterday. As a matter of fact, the point of control is lining up with the previous days, being Friday's value area high. So plenty of control lining up perfectly with that. Just not a whole lot of ways to take advantage of this tight market like this as a day trader on the E-mini S&P. So another reason why I am a recovering day trader for things like this, and I feel for the people trying to make money in markets like that. Anyway, on to the options where the money is made. Into the overall options trades that I'm looking at. PayPal, I'm looking to take this off in my IRA right now. It's very close to 50% of my max profit. And if you remember in there, I have on the August 58.57 put spread in there, and originally collected around 28 cents for it, trying to get out for 50% of my max profit. It's trading around 19, so I'm about a nickel off. It was a little bit closer this morning, but as the tech sector starts moving higher, like the NASDAQ and things like that I was talking about, PayPal is going to do well, and they knocked it out of the park on their earnings. So actually, no, sorry, that was EA Sports. They beat on earnings, though, and kind of spiked on this, but they beat by several pennies and are doing pretty well, especially along the lines with Facebook, e-commerce, Bitcoin being a big thing. Going through PayPal is going to do good for them as far as I'm concerned. Anyway, on to EA Sports. They were the ones that knocked it out of the park. They were supposed to get out like 40 cents, 30 some cents, got $2.06. That's huge, and it didn't really react the way we thought it should, or at least the way I thought it should. We did get a little volatility crush, but volatility is still above an IV percent of 50, which leads us to whether or not we can sell options. And my rules are that yes, anything above an IV percent of 50 is acceptable to sell premium in. And I think I should say, bullish on EA Sports. So I decided to take advantage of that and go in and sell some September 110 puts. This is in my margin account, and I collected $1.40 for that. I don't really see it wanting to go below necessarily 115 anymore. I think that's showed support and resistance right there at around that 115 or 116 level. So I don't see it really going below 115, but I wanted to get a little bit more room for error. So the 110s are way down here. I don't see any reason why it would want to go down there and trade back into this area. So this is the area that it spiked to the last time on earnings when they beat. And you can see it traded in a pretty decently tight range. Never really went below the low of after earnings that showed its support. I'm believing that that's going to be the same case here, where maybe 113, 114 is in the realm of possibility, but at the end of the day, I don't think it's going to go much below 115. So those 110s are in the clear as far as I'm concerned. So I was able to sell those for $1.40. I'm also trying to add a long put butterfly in my IRA using EA Sports, and what I'm looking at is the September, selling the 115 puts one time for every 2 times I buy the 120 puts. Or actually, I'm trying to buy the 115 puts, sell 2 of the 120 puts, and then buy the 125 puts to define that risk. That's IRA appropriate, and try to pay less, right around $1. It's trading about $1.10 right now. So I'm hoping I can let that work out a little bit longer, and I'm going to play around with it. I don't want to go much higher than that. In my rule, in that $5 wide is $1.50, so $1 is really good. So I'm just going to play that one out for a little bit and see how that works out. See if I can get a couple extra pennies for that trade on my side. So EA Sports, IRA appropriate. I'm going to be talking about all the rules that go into that long put butterfly in the webinar this Friday. So go check that out. Long put butterfly is a little bit easier to set up than the long call butterfly, because puts have a tendency to have more premium pumped into them, and that's going to allow us to get a little further away, wider wings, increase our probability of success. So go to ProTraderStrategies.com, sign up for that webinar. It should be a really good one. Had a full house on last Friday's webinar, so make sure you get in there early, get signed up earlier so you can get some priority seating. All right, so if you can't take that, take it easy.